Riocan, one of the most popular REITs in Canada, reduced their annual dividend by 33% from $1.44 annually to 96 cents. So the announcement was made December 3rd, and the stock closed a little lower on Friday the following day at $17.65. So at this current stock price, the new annual dividend yield is 5.44%. So in this video, I will show you 4 alternative REITs in case you want to pivot into a REIT that has a much higher dividend yield. So let's check them out together right now. So before I unveil the 4 alternatives, I just want to say that I still think Riocan is a solid REIT. There is nothing wrong with simply holding on to it, even with the dividend reduction. It's only going to make the stock price go higher with time. I personally believe that this cut was done with an abundance of caution. So before you make a decision to actually sell your shares, I strongly suggest you check out an interview the CEO of Riocan did with BNN or Business News Network. I'll put the link to that below. So in summary, I still think Riocan is a great REIT with solid growth prospects, not only in terms of stock price, but also dividend increases from this point on. And personally, I'm keeping my shares. So regardless of what I think, here are 4 alternatives for you if you want a higher dividend yield. Alright, alternative number 1 shouldn't be a surprise to any of you who know the Canadian REIT landscape. It's Smartcentres REIT. So the stock symbol is SRU.UN. And as you could see from the 52-week range, it recovered nicely from $14. Right now it's $24, but still $8 off the 1-year high of $32. The dividend is $1.85 right now. So the dividend yield is 7.66%, pretty solid. If we look at the dividend history, you could see that this REIT has a very solid history of increase. So what I like about Smartcentres is that Walmart is their primary tenant. As you could see here from this investor presentation, 73% of their properties are anchored by Walmart and 25% of their revenue comes from Walmart. So Walmart, as you know, is essential service, really stable. And here are some of their other tenants, and from what I could see, and I know all these companies well since I'm Canadian, they're all pretty much essential services. So I really like this REIT as a good alternative, very similar to Riocan because they're making smart centers, they're focusing on the major urban cities, and they're going more and more into residential. So that's their plan. You could see here in 2019 they launched Smart Living, a new kind of brand, you would say, which is to accelerate residential growth. So a very solid alternative here to Riocan. Alternative number 2 is Slate Grocery REIT. Stock symbol is SGR.UN. Fun fact, by the way, this REIT used to be called Slate Retail REIT and the stock symbol was SRT.UN. But since they wanted to get away from that retail, since retail took a beating, they changed it to Slate Grocery REIT. So the stock price is at $11.64, so pretty well recovered, just a few dollars under the 1-year high. So a very well performing REIT here. It's a smaller REIT than Smartcentres. Smartcentres was $3.5 billion. This is less than $500 million. But the dividend yield is really nice at 9.20%. The annual dividend rate is in USD. It's given out in US dollars, so it's at 86 cents USD. The 9.20 does include the conversion from US to Canada. So if we look at the dividend history, this also has a solid history of increasing the dividend. So in 2016 it was 81 cents, and if we scroll down, it increased it a few times and now it's at 86 cents. So a really solid REIT here that focuses, like the name says, on grocery real estate. So yes, it is retail, but it focuses on a grocery store. So as you can see, Walmart, number 1 tenant, and the primary focus are supermarkets. What I like about this one is that it's all US, so it focuses on US. So it's a good way for us Canadians to get diversified exposure to the US. So the US, not as many lockdowns, not as severe as Canada. So I think this is a really smart alternative to Riocan. Alternative number 3 is the Firm Capital Property Trust REIT. So the stock symbol is FCD.UN. This is a very small REIT, but still solid. That's why it's traded on the TSX Venture, which is the smaller exchange in Canada. That's why you see that V here. So the dividend yield is a solid 8.06%. Really nice. It's actually a bit higher than that because the annual dividend rate shown here is 50 cents. But they recently, last month, November, increased it to 51 cents starting in 2021. You could actually see the headline here. So a really solid growth REIT here. Here's the breakdown. So this is a Canadian REIT with the bulk of its properties in Ontario, but you have some more diversification in different provinces as well. And here's the key portfolio by asset class. So as you can see, 59% is grocery anchored real estate, which is really good, just like Slate Grocery REIT. I also like the fact that they have a nice chunk in industrial properties, which industrial is a very safe asset class right now when it comes to real estate. They also have some apartment, but very little office. They will increase their residential because like Smartcentres, they're going more into residential smart centers. So you can see here the top 10 tenants, mostly essential services, Sobeys, Loblaws, Metro, IGA, all well-known Canadian giants here. So very solid. But my favorite feature about this REIT is their dividend growth. So they've been increasing their dividend, as you can see here, since 2012 every single year. So 35 cents to 37 to 40, etc. And 2021 is no exception. As we saw, they're raising it from 50 cents to 51 cents. So yes, it's a smaller REIT, much smaller than Riocan, but a solid choice if you want more yield and more growth prospect, if you ask me. All right, alternative number 4 is Brookfield Property Partners. Stock symbol is BPY.UN. So if you don't know Brookfield, they're absolutely huge. They're a flagship or parent company that owns all their other subsidiaries, including this one is Brookfield Asset Management, or simply called BAM. So Brookfield, really solid company. As you could see from the stock price, 1969, it's well off its 1-year high of 26.38, so some nice room for growth here. The dividend is absolutely fantastic at 8.84. So it's at $1.33 USD. As you can see from the market cap, it's 14.4 billion. So an absolute behemoth here when it comes to real estate, about more than 3 times the size of Riocan. So the dividend is in USD. So the 8.84 does include, just like Slate Grocery, the conversion from US to Canada. And I like this one because although they give their dividend quarterly instead of monthly, so every 3 months, they have a really solid track record of increasing the dividend throughout the year. So as you can see here, 2016 $1.12, and they keep raising it every year. Every year they've raised it, and now it's at $1.33. So I don't know if they'll raise it in 2021, but either way, a solid REIT here. Just the scale of this REIT is mind-boggling. They have a total of $202 billion of AUM, which is assets under management. You could see here the breakdown. So the bulk of it is in the US, but you also have some Europe and Middle East, Canada, Brazil, and Asia Pacific. So a really solid REIT here. So yes, the breakdown is right here. As you could see, a lot of office, a lot of retail, and that's really why it took a beating. But in my opinions, because of the sheer size of this REIT, like we saw, a 14.4 billion market cap, I think there won't be a dividend cut. I think they'll be able to hold on, which makes this REIT a solid alternative to Riocan. Alright, so those are the 4 alternative REITs, guys, giving you a higher dividend than Riocan is right now, but I still think Riocan is a solid REIT. So I'll put all the links in the for the investor presentation of the different REITs we saw in the video description below. So if you're planning on investing on any one of these REITs, I strongly suggest you do your own research. It's simply the smart thing to do. Now, what if you want a safer option? You no longer want to invest in any single or individual REITs, like I call them, and prefer something that where the dividend is much more stable and safe, like a REIT ETF, for example. Well, I have to agree and I think that's a great idea. I made a video on my 3 favorite REIT ETFs, so make sure to check that out. The link should be flashing on top of your screen right now, so I promise you won't be disappointed with that video. So as always, if you learned something, please hit the like button. I would really appreciate it, and make sure you're subscribed, because if you like this content, this is what the channel is all about. My mission remains the same. It's to help everyday working Canadians to invest on their own, to build their own stream of passive income, which enhances their quality of life. So with that, take care everyone, stay safe, and see you next time.